All right, so you're thinking about Bitcoin and retirement, and you sent over this article about it,
Yeah.
about how even just owning a fraction of a Bitcoin could
Mhm.
maybe make a big difference later on down the line.
Right.
Could this be the retirement game changer, as some people are saying it is?
Well, the article makes a pretty compelling case,
Okay.
especially when it comes to you know, its potential growth.
Yeah.
It highlights this power law model.
Yeah, that caught my eye too.
Yeah.
It sounds kind of intense, I'm not gonna lie.
Yeah.
But the article mentioned Bitcoin growing at like an average rate of 46% a year.
Yeah.
If that kind of growth keeps up, even a small amount of Bitcoin
Yeah.
tucked away in a retirement portfolio could really add up.
And that's the key thing, right?
Yeah.
Thinking long term, that 46% average annual growth of the model projects is obviously significant.
Right.
But I think what's maybe even more interesting is the why behind it.
Okay.
The article talks about the network effect.
Okay, so the more people use Bitcoin, basically, the more valuable it becomes,
Exactly.
which then attracts even more users and so on and so on.
Exactly. It's like a snowball effect.
I like it.
And so this network effect, combined with Bitcoin's limited supply,
Right.
creates a really fascinating dynamic
Okay.
that traditional investments just don't have.
So it's not just about whether Bitcoin goes up or down tomorrow,
Right.
but how this whole ecosystem might evolve
Yeah.
over the next few decades as we head toward retirement.
Precisely. And that's where this power law model comes in.
Okay.
It looks at the growth of the Bitcoin network.
Mm-hmm.
It factors in historical price trends
Okay.
and then uses probabilistic forecasting to kind of paint a picture of where things might be headed.
But like any model, it's not a crystal ball.
Right.
Right.
Of course not. No, it's about probabilities, not certainties.
Right.
And it's essential to remember that every investment,
Yeah.
especially in a volatile market like Bitcoin,
Of course.
comes with risks.
For sure. And the article doesn't shy away from those risks.
Yeah.
One that really stood out to me was this concept of leverage.
Yeah.
And I have to admit, this is where things get a little murky for me.
Yeah. Leverage can be tricky.
Yeah.
It's essentially using borrowed money to amplify your returns.
Okay.
So imagine you take out a loan
Mm,
to invest in Bitcoin.
right.
That loan is leverage.
So it's like you're putting more skin in the game, even though it's not technically all your money at the start.
Right.
And so that magnifies your gains if things go well.
Exactly. But here's the thing.
Yeah.
It also magnifies your losses if things go the other way.
Yeah, that makes sense.
The article uses the term clearing of leverage
Okay.
to describe what happens when the market takes a downturn.
So if the price of Bitcoin drops and you're leveraged, you might have to sell off some of your Bitcoin to cover those losses.
Precisely.
Okay.
And if a lot of people are leveraged at the same time,
Yeah.
this can create a domino effect, pushing the price down even further.
Wow. So it's like this whole other layer of risk and volatility.
Exactly. And that's where understanding these market cycles becomes super important,
Right.
which the article also touches on.
Totally. Because if you panic and sell at a loss,
You're missing out on those potential gains if the market rebounds.
exactly.
Speaking of potential gains,
Yeah.
there's this other really fascinating concept the article highlights,
Okay.
Bitcoin's scarcity.
Right.
They said that simply owning just 0.32 Bitcoin
Yeah.
could be like a ticket to a comfortable retirement.
Mm-hmm.
Is that for real?
Well, it's not magic or anything.
Right.
It ties back to that limited supply we talked about.
Okay.
Only 21 million Bitcoins will ever exist.
Right.
That's a big difference from something like gold, where you can always mine new
It's
reserves.
like a limited edition collector's item or something.
Yeah.
But instead of a rare comic book, it's like a piece of digital code.
Exactly.
And the fewer there are, the more valuable they potentially become.
Exactly. The article made a really interesting point about this.
Imagine if every millionaire in the world wanted to buy just one Bitcoin.
Okay.
There wouldn't be enough to go around.
Wow.
Right.
I never even thought about it like that.
Yeah.
That really puts things into perspective.
Yeah, it's not just about the price today.
All right.
It's about the potential value driven by scarcity in the years to come.
So we're talking about a completely different way of thinking about money and value then.
Exactly. And that's why understanding these basic economic principles is so important,
Totally.
which thankfully the article also emphasized.
Yeah, they hit the nail on the head with that one.
Yeah.
You can't really make informed decisions about Bitcoin
Right.
or any investment, really,
Mm-hmm.
without understanding that bigger picture.
Yeah.
It's like the article said, economic literacy is like having a superpower when it comes to planning for retirement.
It really is.
Yeah.
For example, just understanding the difference between inflation and deflation.
Right.
can totally change your perspective on Bitcoin.
Okay, so with inflation, the value of your money decreases over time, but with Bitcoin, it's the opposite.
Exactly. Because there'll only ever be 21 million Bitcoins.
Right.
Its value is actually meant to increase as more people use it.
Okay.
It's a deflationary asset,
Interesting.
which is kind of a fundamental shift in how we usually think about money and value.
For sure. And the article also talked about the importance of recognizing those market cycles, the ups and downs that just kind of come with the territory of any investment.
Right. Writing out those cycles without making emotional decisions
Yeah.
is key.
Totally. It's about understanding that volatility is just part of the game,
Yeah.
especially with something as groundbreaking as Bitcoin.
Exactly.
And then, of course, there's risk management, which they talked about.
Yeah.
It's not just about going all in on Bitcoin, right?
Definitely not. Diversification is key.
Right. Don't put all your eggs in one basket.
Exactly. Don't put all your digital eggs in one digital basket.
I like that.
Right.
Yeah, that's a good one.
The article recommended, spreading your investments across different asset classes.
Okay.
Using leverage cautiously.
Right.
And just staying informed about market trends.
It really does all come back to knowledge is power.
Absolutely.
So to bring this all together, it seems like Bitcoin, with its potential for growth, its limited supply, and its connection to these bigger economic forces, really does offer a unique perspective on planning for retirement.
Yeah, it's not just about picking stocks and bonds anymore.
Right. It's a whole new world out there.
It's about understanding how this landscape is changing.
Yeah.
And, being open to these new possibilities.
Yeah.
And, it's not even just about the numbers.
Right.
It's about understanding the principles at play here.
Okay.
Network effects, scarcity, economic cycles.
Yeah.
And how these things might shape the world in the years ahead.
That's a really good point. It's about being engaged and informed no matter what the future holds.
Exactly.
Well-
Well said.
And if I can just leave you with one final thought,
Okay.
it would be this. We've talked a lot about how people are using Bitcoin,
Right.
but how might its adoption by bigger institutions,
Okay.
banks, governments, corporations,
Hmm?
how might that impact its price and its role in the global economy in the future? Now, that is something to think about. And on that note, we'll leave you to continue your deep dive.
Good luck out there.
Keep exploring, keep asking questions, and remember, knowledge is power,
Yeah.
especially when it comes to your financial future. Until next time, happy diving.